Did you know that the artificial intelligence industry is projected to reach a staggering $1 trillion by 2030? But what's driving this explosive growth? The answer lies in semiconductors, the tiny chips that power AI technologies and applications. In today's video, I'll show you and John the top 6 AI stocks that are set to benefit the most from this technological boom, with a special focus on semiconductor companies. Which companies are at the forefront of the AI revolution? And most importantly, which stocks should you consider adding to your investment strategy? I'll show you how much return they can make on a $10,000, $50,000, and $100,000 investment in the next year. And be sure to stick around until the end, where I'll show you and John a stock that has the potential to triple your investment by the end of next year, potentially offering a 200% profit in a single year. So, whether you're an investor looking to diversify your portfolio or a tech enthusiast curious about the next big thing, this video is for you. Starting with the question, why the AI semiconductor industry? Investing in AI semiconductors is key to staying competitive in the global tech landscape. Countries and companies focusing on this sector aim to lead in AI advancements, driving progress that can transform industries and improve societal outcomes, making AI semiconductors a cornerstone of future technological development. The fact is, the AI semiconductor industry is growing rapidly, driven by the increasing demand for AI in various fields. AI-specific chips like GPUs, TPUs, and other specialized accelerators are crucial for powering applications in self-driving cars, advanced robotics, and personalized medicine. These chips enable faster and more efficient processing of complex AI algorithms, outperforming traditional processors. This innovation is essential for the scalability and efficiency of AI technologies, and hence the returns for investors. Coming up next are 6 AI semiconductor stocks that'll help you take advantage of this revolution, arranged from one of the more modest to the best options in the investment space. Starting off our list is a company that's at the forefront of high-performance computing and graphics solutions, Advanced Micro Devices Incorporated. Known by the ticker symbol AMD, this company is a big deal in the tech world, producing high-performance computing and graphics solutions. They make powerful computer chips that are important for things like AI, gaming, and most importantly, running big data centers. Averaging out over the past 10 years, AMD's stock price has shot up by almost 45% every year. That's crazy growth, and highlights AMD's successful product innovations and strategic market gains. In the past year, AMD's stock has risen by 55.6%. With a year-to-date return of 11.7%, AMD is on track to sustain its strong performance into next year. If AMD continues to deliver at this pace, John's $10,000 investment has the potential to grow to $15,560 by next year. A $50,000 investment would increase to $77,800. A $100,000 investment would rise to $155,600. These potential returns reflect AMD's strong position in the AI and high-performance computing markets. Their finances look pretty solid too. In the last year, they made about $22.6 billion in sales. After all their costs, they still had around $1 billion in profit, which is great. Their cash flow, basically the money they're bringing in, was about $1 billion. AMD's also really into making new stuff. They spend about $4 billion every year on research and development to come up with even better products. And they're not just doing it alone, they're teaming up with other companies to stay ahead of the game. Now let's talk about their stock price. Right now, TipRank has given a rating of strong, with the stock having the potential to reach $192. Wall Street analysts offer a rating of buy, and Seeking Alpha recommends a hold on AMD stocks. Next up at number 5, we have Applied Materials. Known by the ticker symbol AMAT, this company is a global leader in materials engineering solutions used to produce virtually every new chip and advanced display in the world. The company's equipment and services enable the manufacture of semiconductor chips, which are foundational for AI technologies. AMAT has delivered an annual share price appreciation of 27.16% over the past 10 years. In the past year alone, its stock has surged by 74.3%, reflecting its pivotal role in semiconductor manufacturing and the booming demand for its advanced equipment. With a year-to-date return of 35.59%, AMAT is well-positioned to replicate its strong performance in the next year. If AMAT maintains its current trajectory, John's $10,000 investment will grow to $17,430. A $50,000 investment would increase to $87,150. And a $100,000 investment has the potential to reach $174,300. These projections underscore the attractive potential returns for investors considering Applied Materials in their AI-focused portfolios. Let's talk money. Last year, Applied Materials made about $26 billion in sales, out of which they secured $7.3 billion in net income. That's a lot of profit. Their free cash flow, which is basically the money they have left over after running the business, was around $2 billion. So financially, they're in pretty good shape. Applied Materials isn't sitting still either. They're investing about $3 billion every year in research and development to come up with even better stuff. And because their technology is crucial for making the chips that power AI, they're in a good spot to benefit from the AI boom. As for the stock price, right now TipRank has given a rating of moderate buy, with the stock having the potential to reach $236. The Wall Street Analysts rating and Seeking Alpha also offer a recommendation of buy. Moving on from materials engineering, let's take a closer look at another significant player in the semiconductor space, KLA Corporation. Known by the ticker symbol KLAC, this company specializes in process control and yield management systems for the semiconductor industry, making it an essential player in ensuring the quality and efficiency of semiconductor manufacturing. Their technologies are critical for the production of advanced AI chips, as they enable the precise control and inspection of semiconductor wafers. An average share price appreciation of 28.23% every year over the last decade proves that. Over the past year, this stock has achieved an impressive return of 82.37%. And with a year-to-date return of 32.19%, KLA is on a solid trajectory to continue delivering strong returns in the upcoming year. Now, if you're wondering where I get all this data from, let me tell you about our channel's official partner, Seeking Alpha. It's been my go-to tool for winning in investments. It's easy and simple, and I love how I can access under-the-radar investing ideas, earnings call transcripts, and breaking news. Plus, the exclusive data-based stock rankings have been a game-changer. Stocks rated strong buy and their alpha picks have beaten the S&P 500 by over 80%. So definitely check them out in the description. They've also promised to give a 20% discount on premium membership with a 7-day free trial and a 10% discount on alpha picks to anyone in our community who joins using the link from the video description. Okay, back to KLA. Should KLA maintain their recent performance, John's $10,000 investment could grow to $18,237. Meanwhile, a $50,000 investment could reach $91,185, and a $100,000 investment could expand to $182,370. These figures show the significant potential returns for investors betting on KLA's continued success in the AI semiconductor sector. Now, if you think that's good, just wait until the end, where I'll show you a stock with the potential to triple your investment by the end of the year. In other words, the potential for a 200% profit in a single year. Last year, KLA made about $10.5 billion in sales. After covering all their costs, they had about $3.8 billion in operating income, which is a sign of how efficiently they're running things. Their net income, which is basically the profit after all expenses, was about $2.8 billion. Their earnings per share, which tells us how much of their profit each share represents, was around $19. To make sure they keep improving this number, they're putting about $1.1 billion every year into research and development to keep improving their technology. They also gave back to their shareholders through dividends, and they've been buying back some of their own stock, which helps increase the price further. Right now, TipRank has given a rating of moderate buy. The Wall Street analysts' rating and Seeking Alpha recommendations stand at buy. Our next company plays a crucial role in the production of semiconductor chips: Micron Technology. Known by the ticker symbol MU, this company is one of the key players in the semiconductor industry and is known for its innovative memory and storage solutions. As a leading producer of DRAM and NAND flash memory, Micron is pivotal in supplying the high-performance memory required for AI applications. The stock has shown a steady annual price appreciation of 16.72% over the past 10 years. But in the recent boom, in fact, in just the past year, Micron stock has soared by 88.13%. With a year-to-date return of 49.55%, the stock appears to be on track to sustain its impressive performance into the next year. If Micron continues to perform at this rate, a $10,000 investment would grow to $18,813. A $50,000 investment would increase to $94,065. And a $100,000 investment would rise to $188,130. These potential returns highlight the robust growth prospects for investors considering Micron as part of their AI and semiconductor investment strategy. In the latest fiscal year, Micron reported revenues of $15 billion. Despite facing cyclical market challenges, Micron has shown resilience through strategic investments in advanced technology nodes and cost-effective manufacturing processes. Micron's strong R&D capabilities with an annual budget of approximately $3 billion enable it to stay ahead in the rapidly evolving AI and semiconductor markets. The company's focus on high-growth markets such as AI, 5G, and autonomous vehicles positions it well for future expansion. As for the stock price, right now, TipRank has given a rating of strong buy, with the stock having the potential to reach $137. Meanwhile, the Wall Street analysts' rating also stands at strong buy, while Seeking Alpha recommends buy. As we move from memory and storage solutions to process control and yield management, let's take a closer look at another significant player in the semiconductor space. But before showing you the final stock that has the potential to give you a 200% return by next year, let's take a look at a stock that has the potential to give you a 100% return on investment. Broadcom, or AVGO, its ticker symbol. A leading designer, developer, and global supplier of a broad range of semiconductor and infrastructure software solutions, Broadcom has been around since the 1990s. It's shown an impressive annual share price appreciation. In fact, over the past 10 years, it has averaged growth of around 35.18% every year. This number's gotten even better in recent years. In the past year, Broadcom's stock has skyrocketed by 108.25%, making it our first stock with the potential to double your investment by the end of next year. With a year-to-date return of 25.35%, Broadcom is on track to continue its exceptional performance into next year. If they maintain their current momentum, a $10,000 investment would grow to $20,825. A $50,000 investment would increase to $104,125. And a $100,000 investment would rise to $208,250. Now let's talk money. Last year, Broadcom made about $38 billion in sales. After covering all their costs, they still had a gross margin of about 73%. That's really high and shows they're making a good profit. Their operating income, which is basically their profit from running the business, was about $15 billion. Their net income, which is the profit after all expenses, was about $11 billion. So it's safe to say they're doing extremely well. Like every other AI semiconductor company out there, Broadcom is also spending about $5 billion every year on research and development to keep coming up with new and better technology. They're also buying other companies to add to their products, and because they make a lot of different things, they're in a good position to benefit from growing markets like AI. Right now, TipRank is given a rating of strong buy, with the stock having the potential to reach $1,571.55. Meanwhile, the Wall Street Analyst Trading and Seeking Alpha both recommend buy. Finally, let's focus on a company that has set the gold standard in AI computing and GPU technologies: NVIDIA, with the ticker symbol NVDA. Arguably the most prominent player in the AI semiconductor market, known for its powerful GPUs and AI computing platforms, its technologies are at the heart of AI research, autonomous vehicles, and data centers, making it indispensable to the AI revolution. This company has shown exceptional growth when it comes to stock price. More on that later, but first, let's see how financially stable this company is. Just like its stocks, NVIDIA has shown exceptional performance when it comes to profitability. In its latest fiscal year, the company reported revenues close to $80 billion, with a gross margin of 75%. NVIDIA's operating income stands at $47 billion, with a net income of $42 billion, resulting in an earnings per share of $17. The company generated a free cash flow of $2 billion, indicating robust financial health. The company's strategic focus on AI, gaming, and professional visualization sectors positions it for sustained growth. In fact, in the past decade, it had exceptional growth, with an impressive annual share price appreciation of 70.55%. Last year, NVIDIA's stock surged by 205.2%, making it one of the only stocks in the market to triple your investment values over the next year. With a year-to-date return of 92.62%, the stock is almost halfway there to meet and exceed the target. If this trend persists, John's $10,000 investment in this stock could grow to $30,520. A $50,000 investment would climb to $152,600, and a $100,000 investment could soar to $305,200. Right now, TipRank offers a rating of strong buy, with the stock having the potential to reach $1,104.62. The Wall Street Analyst Trading also stands at strong buy, while Seeking Alpha currently offers a recommendation of buy. Now, if you're interested in creating a $1 million diversified portfolio, click the video on the screen.